At $100 per XRP, we're not just talking about a nice pump. We're talking about a multi-trillion-dollar asset on the scale of global reserve currencies and gold. That's the size of the dream, and that's why this question matters. In this episode, we're going to walk year by year, 2025, 2026, 2030, 2040, and 2050. We'll map out realistic price zones for XRP, the conditions behind each scenario, and ask honestly, what would it actually take for XRP to hit $100? Some answers will surprise you, some may disappoint you, but all of them will be real. Before we dive in, I want you to play along with a simple thought experiment. Pick a year in your head, 2025, 2030, 2040, or 2050, and ask yourself this. If XRP hasn't hit my target by then, at what point do I stop believing the story? Keep that year in mind as we go. It will change how you hear the numbers. Most wild price predictions ignore a simple question. What is XRP actually for? XRP was built as a fast, low-cost settlement asset for payments and liquidity, especially cross-border transfers and bridging between currencies. It's not trying to be a meme coin lottery ticket. It's trying to be infrastructure. And when you judge a coin built for pipes and plumbing, you judge it on volume, reliability, and integration, not just on price candles. Infrastructure grows slow, then suddenly. To understand future targets, we need to remember where XRP has already been. XRP has seen multiple boom and bust cycles, explosive rallies, deep crashes, and long flat periods. It traded for fractions of a cent, then nearly hit $4 in the 2017 to 2018 mania, then spent years stuck under $1 while other altcoins made new highs. The SEC lawsuit froze a lot of U.S. interest. Then partial legal clarity brought XRP back into the spotlight. The pattern is clear. When narrative, liquidity, and regulation line up, XRP can move violently. History shows it can surprise both bulls and bears. Right now, XRP lives in the zone most people hate. The "it's not doing enough" zone. It's not at super cheap despair levels, and it's not at euphoric blow-off highs. It spends a lot of time in what feels like a boring range, low single-digit dollars, grinding, consolidating, and frustrating impatient traders. But that range matters. It's where long-term positions are built, leverage gets flushed, and utility quietly grows in the background. Boredom is where big future moves are often seeded. Quiet phases build the base. So let's talk cold numbers. If XRP's circulating supply is in the tens of billions of tokens, then at $10, you're talking roughly in the hundreds of billions of dollars in market cap. At $50, you're in the low multi-trillion range. At $100, XRP starts competing with the total value of entire major asset classes. That doesn't make 100 impossible, but it makes it conditional. For XRP to get there, the world of money has to look radically different. You can't reach 100 in a normal world. The first big lever is regulation and legal clarity. For years, the biggest cloud over XRP was simple. Is it a security or not? That uncertainty kept a lot of institutions away. As more jurisdictions clarify how they classify XRP and how banks and payment providers can hold or use it, the ceiling moves higher. Clear rules don't guarantee price growth, but they unlock doors that were previously welded shut. You can't have multi-trillion flows without lawyers being comfortable. Legal clarity is liquidity's best friend. The second lever is real adoption in payments and liquidity, not just speculation. XRP's strongest narrative is as a bridge asset for cross-border payments, remittances, and institutional liquidity. For price to move sustainably, you want to see growing transaction volume, more corridors, more banks and fintechs using XRP to actually move value, not just traders passing the same tokens around. Utility doesn't spike overnight. It compounds over years. Real usage turns hype into a business case. Follow the volume, not just the vibes. Third, we have macro and the global liquidity cycle. Crypto doesn't live in a vacuum. It breathes the same air as stocks, bonds, and real estate. Interest rate cuts, money printing, debt crises, and loss of confidence in traditional systems can all push capital toward crypto as an alternative. In those windows, money flows downstream, from Bitcoin to majors like ETH and XRP, then to smaller caps. If XRP wants a shot at double-digit prices, it almost certainly happens during a broad risk-on cycle with massive liquidity. Big moves need big waves. Liquidity is the tide that lifts everything. Fourth, there's competition and technology. XRP isn't alone in fast payments anymore. You've got other layer 1s, layer 2s, stablecoins, CBDCs, and even upgraded bank rails. For XRP to justify a long-term premium, it has to stay relevant. Reliable uptime, low fees, decent decentralization, strong tooling, and integrations. If new tech makes XRP obsolete, price dreams die quietly. If XRP remains a go-to settlement and bridge asset, its long-tail value stays intact. Relevance is a moving target. Innovation never sleeps. So what does all of this mean for 2025? In the near term, the story is mostly about cycles and sentiment, Bitcoin halving effects, ETF flows, regulatory headlines, and macro decisions like rate cuts can create strong volatility. Under a conservative scenario, XRP might simply oscillate in the low single digits, frustrating both bulls and bears. Under a bullish but realistic scenario, strong liquidity and a favorable regulatory environment could push XRP into the mid-single or even high single digits. A full, clean break into consistent double digits by 2025 would already be a major achievement. Don't underestimate single digits. Single digits can still be life-changing. Now let's zoom out slightly to 2026. By then, the market will likely have digested at least one full post-ETF, post-halving cycle. If adoption progresses and lawsuits remain in the rearview mirror, XRP could be better positioned as a veteran altcoin with proven staying power. A base case might see XRP ranging somewhere between its previous highs and new tests of the $10 region during strong risk-on phases. An aggressive but not insane case could see spikes beyond that in blow-off tops. The key is this. By 2026, we're mostly still talking about one-digit to low double-digit XRP, not sustainable three-figure fantasies. Long-term credibility grows in steps, not jumps. If you're finding this kind of breakdown helpful, and you prefer calm, long-term XRP analysis over hype and shouting, it's worth mentally bookmarking this style of research. Having at least one rational voice in the middle of all the noise can make a big difference when emotions are running hot. Your future self will thank you for staying grounded. Now, the real imagination test, 2030. 7 years may sound far away, but in financial history, it's nothing. By 2030, several big questions will likely be answered. Did banks and fintechs actually embrace crypto rails? Did stablecoins and CBDCs crowd out assets like XRP? Or did they coexist, with XRP acting as a neutral bridge? In a moderate success scenario, XRP could realistically live in a band somewhere around the higher single digits to maybe the $15 to $20 range during peak cycles. In a strong adoption boom, you could imagine even higher spikes. But remember, each extra dollar requires exponentially more capital. Growth gets heavier. The higher you go, the harder it is to climb. What about 2040? This is where we leave the world of traditional price predictions and move into macro civilizational scenarios. By 2040, we'll know whether blockchain settlement has become part of the backbone of global finance or remained a niche layer. If a meaningful percentage of cross-border flows, remittances, and even corporate treasury operations consistently route through XRP, then multi-trillion valuations for the entire crypto space become more plausible. In a best-case, high-adoption world, XRP trading anywhere in the $30 to $60 range during strong cycles isn't completely crazy, but it would mean a fundamentally different financial system than today. This is not the default future, it's the ambitious one. Ambition comes with uncertainty. And now the big one, 2050 and the $100 question. Can XRP one day be worth $100 per coin? Mathematically, yes. Practically, it would require a perfect storm. Large portions of global settlement running on or through XRP, crypto widely accepted as core financial infrastructure, and fiat currencies possibly weakened by repeated crises. We're talking about a world where on-chain liquidity is as normal as SWIFT is today. In that kind of extreme, high-trust, high-usage environment, $100 XRP becomes a tail risk upside scenario. Possible, but far from guaranteed. It's the far end of the probability curve, not the middle. Treat it like a lottery bonus, not a base case. Hope is not a strategy. Here's a harsh truth. Most viral price predictions ignore one brutal fact. Almost all long-term predictions are wrong. Humans are terrible at seeing compounding effects and structural breaks. In 2010, almost no one modeled smartphones, social media, cloud computing, and AI as they exist today. In the same way, making a straight-line forecast for XRP from now to 2050 is more art than science. The right way to think about it isn't what price will it be, but what range of futures am I preparing for? Predictions should guide risk management, not fantasy spreadsheets. Preparation beats prediction. One of the biggest mistakes XRP investors make is going all in on a single outcome. They hear $100 XRP and build their entire financial identity around that number. That's dangerous. Over-leveraging, taking on debt to buy more, or refusing to take profits at life-changing levels because it's going higher has destroyed more portfolios than bear markets ever did. A better approach is simple. Decide in advance what levels would materially change your life and plan partial exits. Hope for the best, prepare for less. Profit is only real when you take it. So how do you actually structure your thinking? Instead of one prediction, build 3 scenarios: a conservative case, a base case, and an aggressive case. For example, conservative might assume XRP mostly ranges under $5 with occasional spikes. Base case might assume a few strong cycles with XRP, occasionally testing $10 to $20. Aggressive case might assume a full utility boom with much higher peaks. Then ask yourself, how does my portfolio behave if only the conservative case plays out? If the answer is, I'm ruined, you're positioned wrong. Survival beats prediction. Living to fight another cycle is everything. Another underrated skill is watching for invalidation signals. A bullish thesis isn't a religion, it's a hypothesis. If major payment partners abandon XRP, if regulation turns sharply hostile in key regions, if superior technology wins all the big deals, or if on-chain data shows shrinking real usage year after year, those are signs the story is breaking. In that world, clinging to 2050 $100 dreams is not conviction, it's denial. Smart investors know when to change their minds. Flexibility is a superpower. On the flip side, what are the green flags for the long-term XRP thesis? Growing transaction volume with real-world value, not just wash trading. More corridors and countries using XRP in production for remittances and corporate payments. Clear, harmonized regulations in major economies. Healthy decentralization of validators. Strong developer activity and tooling. Consistent derivative interest that aligns with spot demand. If those metrics trend up over years, they tell you something simple. The network is getting more useful. Utility is the deepest signal. Real usage doesn't lie. There's also a mindset shift you can make today that changes everything. Stop treating XRP as a scratch-off lottery ticket and start treating it as a long-duration tech and infrastructure bet. That means thinking in cycles, decades, and probability ranges, not days and exact targets. It means accepting you will never buy the bottom or sell the top. It means seeing $2, $10, $30, or even $100 not as promises, but as different branches of a tree of possible futures. This mindset won't make charts less volatile, but it will make you less fragile. Emotional stability is an edge. So, where does that leave us? By 2025 and 2026, XRP's realistic battleground is still in the single digit to possibly low double digit range during strong cycles. By 2030, if adoption grows, higher peaks become possible, but still likely below the wildest social media targets. By 2040 and 2050, $100 lives in the far ambitious edge of what could happen if the financial system itself transforms and XRP rides that transformation successfully. It's a scenario to understand, not to bet your entire future on. The middle path is usually the truth. Use XRP not just as an asset in your portfolio, but as a lesson in how to think about risk, time, and uncertainty. Don't let hype steal your discipline. Don't let fear steal your opportunity. Somewhere between $0 and $100 lies a wide, complex spectrum of possible realities. Your job is not to predict which exact one will happen. Your job is to be positioned so that across many futures, you're still standing, and ideally better off. Not professional advice. Consult a qualified expert as needed.